This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, my name is John Moffat, and this is the first of a series of lectures working through the syllabus for paper P2. And because it's the first lecture, just a few general points. Firstly, do make sure you've downloaded the free lecture notes from the paper P2 page of the Open Tuition website, because as we have these lectures, I'll be going through the lecture notes, primarily working through the examples. So it's important you have them in front of you. As you'll see, although I'm going to explain primarily using the number examples, the calculations, I'm not going to read every single word of the notes to you. That would be silly. So as we get to the end of a chapter, do make sure you go back and you read the notes properly and check that you are happy with things. Secondly, at the end of each chapter, as you finish them, you'll find again on the paper P2 page of the Open Tuition website, you'll find a short practice test on each chapter with a few exam style questions. So when we get to the end of chapter 1, do go and have a go at these questions, and similarly for each chapter. Thirdly, if you do have any problems, either you're not sure about something I've said during the lecture, or something that's written in the notes, or something with any questions you may be attempting, again, on the main paper 2 page of the Open Tuition website, you will find a link to Ask the Tutor forums. And so do ask any questions you've got there. We always answer within 24 hours and generally a lot faster. And we'll do our best to help you. So there we go. Let's make a start on chapter 1. And you'll see it's activity-based costing and activity-based management. And activity-based costing itself, you should already be happy with. It's revision from paper P1. And so let's chat through it very quickly. As I said a moment ago, I'm not going to read all the notes to you. I hope it's written well enough that it's clear. If anything isn't, sorry, I know I'm repeating, but do ask in the Ask the Tutor forums. But you'll see on the second page as an exercise, which is something and nothing, but it says, explain the benefits which can be gained by better allocation of overheads and more accurate product costing. I'll remind you with an example shortly, but you should remember that activity-based costing is a better way of dealing with overheads. It gives more accurate costings. And the benefit of more accurate costings is primarily that the better the costing, the more sensible a selling price we can determine. It's more helpful for decisions, for budgeting, for planning, which products to make and so on. The more accurate a cost per unit that we can arrive at, the better our decisions, the better our planning. However, let's go into the example proper. If you look at example 2 on the next page, here is something which, again, I hope is revision, but let's just check as quick as we can. Have a quick read with me. It says, Una manufactures 3 products, A, B and C. We've been given data for the period just ended, so product A, for example, we're producing 20,000 units. The selling price is $20 a unit, materials $5 a unit, labour 2 hours a unit, and below, labour is paid $5 an hour. We've got overheads there, a total of 190,000. And the object of the exercise always is to get a full cost per unit to produce our cost cards. Part A is what we call traditional costing. It says calculate the cost and hence the profit per unit, absorbing all the overheads on the basis of labour hours. So basic traditional absorption costing, nothing yet to do with ABC, but let's do it. Let's write up our cost cards. With 3 products, A, B, C. And the unit costs. Materials, obviously no problem, straight from the question. A, $5 a unit, B, 10. Try and write nicely. C, 10. And labour. 2 hours, A, 2 hours a unit, but labour's paid at $5 an hour. So $10 for A, and 1 hour each, so $5 for B and C. So far we've got the variable cost, the marginal cost, but if we want the full absorption cost per unit, we need to bring in the overheads. We need to absorb them to get an overhead cost per unit. The overheads, forget the breakdown for the moment, but it says in total the overheads for the period are 190,000. And again, part A, we're going to absorb the overheads on the basis of labour hours. So I'll jump to my workings and then come back and finish the cost cards. But the total overheads, 190,000. To get overheads per hour, we need the total labour hours. We're producing 3 products, A, B and C. Product A, 20,000 units, and each one takes 2 hours a unit, so 40,000. B, 25,000 units, and each takes, 1 hour a unit, so another 25,000 hours. And product C, 2,000 units, again at an hour, 2,000. So a total of 67,000 labour hours. And so the overhead absorption rate, 190,000 in total, spread over 67,000 hours. It gives us a cost per hour absorption rate of 2.836 per hour. I've done it to 3 places there, but when I in a second go back to the cost card, I'll do things to the nearest cent, as would normally be the case. So we're going to charge the overheads at 283.6 per hour. If we go back to the cost card, our product A was 2 hours at 2.836. So per unit is $5.67, whereas product B and C are both 1 hour. So again to the nearest cent, 2.836, 2.84 per unit. Now that gives us a full cost or an absorption cost per unit of A, $20.67, B, $17.84, C again $17.84. So there's the cost per unit on this approach. The question also wanted to know the profit per unit. Well, we're told in the question that the selling price is $20 in each case. So the profit per unit, A in fact appears to make a loss of 67 cents, whereas B and C are both profitable at, $2.16 a unit. So again, there's traditional absorption costing. Just taking all the overheads. Here are absorbed on labour hours. On other occasions we may absorb on machine hours. But it would appear on that approach that A, we've got a problem with. A would appear to be loss-making. And so we should be looking for ways maybe we can increase the selling price to make it profitable. look for ways of cutting the cost to make it profitable, or in the extreme, maybe we should stop making A completely and devote our resources instead to making B and C. However, if you remember, a much better approach to costing is part B, to use activity-based. Because with traditional, all we've done, we've absorbed the overheads, but we simply looked at the total of 190,000 and we paid no attention to how the overheads were actually arising. And if you look back, it turns out that 190, 90,000 of it is setup costs. That maybe we're producing these three products, we're using the same machines for all three, but perhaps we use the machines, make a few thousand of A, then we switch to making a few thousand of B, then we switch to C, and then make some more A's and so on, that we're making them in batches. But every time we switch the machines from one product to another, the machines need setting up again, need to change the settings. Maybe we employ 3 men, paid 20,000 each. We've got the cost of their office or the other associated costs, but in total, these men who are doing the setups are costing us 90,000. Receiving, we're buying material. Maybe we've got again a team of people sat in an office whose job is to check in the material, and the cost of their wages, rent of their office, etc. is 30,000. Dispatch, moving stuff out of the factory. Again, several costs involved, but in total 15,000. And machining, the cost of running the machines themselves, 55,000. With absorption costing, I beg your pardon, with activity-based costing, we're still going to absorb, we're still going to charge the overheads, but instead of just looking at them in total, we'll look at each separate overhead and absorb it, charge it in whatever seems the fairest, the most sensible way in each case. So let's go straight into part B, which is the full activity-based costing. Again, we want to end up with cost cards, A, B, C. And it starts off exactly as before, in that there's no argument. The materials per unit are 5, 10 and 10. The labour per unit, again, 2 hours at $5 at 10, then 1 hour at 5 and 5. It's the overheads where we're going to deal with them differently. And so again, let me do workings, and then I'll come back and finish off the cost cards. So let's look at our overheads. And we look at them one by one. So, although the overheads are 190,000, first of all, the setup costs in total we're spending 90,000. And although ultimately, obviously we need a cost per unit for the overheads, initially we'll just split the total of 90,000 between our 3 products. We're spending 90,000. What's causing us to spend the 90,000? Well, that's the cost driver data below. And if you look at the information at the bottom, which so far has not been relevant, those setup costs, we've got that cost because of keep having to set up machines. And we're told how many setups there are for each of the 3 products. So we're having to set up 10 times to make A. We're making 20,000 units. Presumably, we're doing them in batches of 2,000 each time. 10 batches, 2,000. Anyway, there are 10 setups. Similarly, we're setting up 13 times for B, 2 times for C. So in total, there are 25 setups. And so let's work out the cost per setup. I'll make it look a bit prettier. The cost per setup again, we're spending 90,000 in total. We're setting up in total 10, 13, 2, a total of 25 times. And therefore, effectively, each setup is costing us 3,600. And having calculated a cost per setup, now we can charge it to the three products. So product A, we're setting up 10 times, and at 3,600, it's costing a total of 36,000 for A. Similarly, B, we're setting up 13 times. So 13 at 3,600 each time is 46,800. And similarly, we're finding a C. 2 setups at 3,600 is 7,200. Now, I said a minute ago, ultimately we want a cost per unit. We will sort that out later. But for the moment, I'm simply sharing the overheads between the various products in what seems the most suitable way. So similarly, let's go back to those overheads. The next one is receiving. Total of 30,000. And again, from the information below, if this is the cost of receiving the goods into our factory, the most sensible way of charging it would appear to be on number of deliveries received. And so, let's work out the cost per delivery. It's 30,000 in total. In total, how many deliveries? 10, 10, 2, so a total of 22, which means it's costing us 1,364 per delivery. Now, I've rounded there. Some people get upset about the rounding, and I'll come back to that in a second. But if I do leave it as 1,364, then I don't think well, all right, I'll show workings. Product A, 10 deliveries at 1,364 is 13,640 to A. Similarly, B, 13,640. C has 2 deliveries at 13,64, which is 2,728. Now, a minute ago I mentioned the rounding. Some people get awfully upset because that doesn't add up to 30,000. Because of roundings, it actually adds up, I think, to 30,008. It's $8 different. Well, as you'll see later, I'm not really too bothered. Because remember, at the very end of this, I want to know the overheads per unit, and you'll see when we come to the end, a little bit of rounding here is going to make no difference. If it does upset you, then fine, do it to more decimal places. But again, you'll see at the end that it really not worth wasting the time. Anyway, let's carry on. We're nearly there. The next one, dispatch. Total 15,000. And again, looking at the information, the obvious way of charging that would be based on the number of orders dispatched. So the cost per dispatch, 15,000 divided by the total number of dispatches, 20, 20, 20, 60. And so the cost per dispatch is 250. And charging it to the products 20 each time, 20 at 250, it'll be 5,000 in total to each product. Now, I'm not actually quite as stupid as I may sound. Given that it's 20 for each product, I could simply have divided the 15,000 by 3. It's an equal amount to each. I've written cost per dispatch because if we were specifically asked to get what's effectively an absorption rate, then obviously we'd need to calculate that 250. Finally, though, the last overhead is machining. The total is 55,000. And it's here that some people make a rather silly mistake, because it's started to become rather automatic. But what some people do without thinking, they say, the cost driver, what's causing it, again from the information, it's machine hours per unit. And don't, if you're doing this with me, don't copy this down, heaven's sake, because it's wrong. But they say, let's work out the cost per machine hour. 55,000. How many hours? 222. And off they go. It's such a common mistake. But although we are going to take the same approach as with the others, the point is it's 2 hours per unit. And so to get a cost per hour, we need to divide 55,000 by the total number of hours, not by the hours per unit. And so, with a bit more workings here, how many machine hours are we working? Well, it's 20,000 units, and each is taking 2 hours. So a total of 40,000 hours. B is 25,000 units being produced from the top table. Each one's taking 2 hours, so 50,000. And C, 2,000 units, 2 hours is 4,000. So in total, we're working 94,000 hours. And therefore the cost per hour, 55,000 overheads, divide by 94,000 hours, I get 0.585. Again, there's rounding, but it's the same explanation as before. I'm not going to repeat it. Now we can charge it to the products. So A was 40,000 hours at 0.585. Gives me how much? 23,400. Product B, 50,000 hours is 29,250. And finally, product C, 4,000 hours. I get 2,340. Okay, well, now we've split all the overheads between the products, so the total overhead for each product comes to, so if I can do my additions right, for A, 36,000, 13,640, 5,000, 23,400, a total of 78,040. For product B, I get 94,690. And finally for product C, um, 17,268. And just as a double check, subject to rounding, they should add up to 190,000. So let me just check. 94,690, 78,040. They actually add up to 189,998. So again, we're a couple of dollars rounding, which you'll have to see. I'm not worried. As total overheads, remember for the cost cards, I want the overheads per unit. So we know how many units of each we're producing. A is 20,000. B is 25,000. C is 2,000. And therefore, the overhead cost per unit A, 78,040 in total, divide by 20,000 is 390. And you see here, as usual, I'm keeping it to the nearest cent. And so the fact there may be $1 or $2 difference in the total, when it comes to the nearest cent, it won't make any difference at all. In the same way though, B, 94,690 divided by 25,000 units is 379 a unit. And finally C, let me check again, sorry, 17,268 divided by 2,000 is $8.63. Well, that was my workings. The objective, obviously, again, is to finish our cost card. So let's go back. 390, 379, 390 for A, 379 for B. And I'm sorry, I forgot what C was. Was it 863? Yes, it was. And so on this approach, the overhead split that way, and the full cost per unit, A is 1890, B is 1879, C is 2363. So there's our costings. The question finally wanted to know the profit as well. Well, the selling price, where was it in the top? It was $20 a unit. And therefore, this approach to the costing, we end up reporting a profit for A of $1.10 per unit. For B, $1.21. And C would appear to be loss-making, a loss of $3.63 per unit. And so whereas under traditional absorption costing, it looked as though A was a problem, if you look back, A seemed to be reporting a loss. In fact, under activity-based, which we'll discuss slightly more in a minute, but I think is clearly a better approach, under activity-based, in fact, A is profitable, A and B are profitable. I mean, it's C that's the problem. It's C that is loss-making. It's C where we need to consider, can we cut the costs in any way, or can we increase the selling price? Because at the selling price of 20, we're losing money. So, I said before, that should be pure revision from P1. Shortly, I've got a little bit to say first, but shortly we'll look at ways in which the same sort of approach can be extended into other areas. But before we do that, if you look at the next page of the notes, it talks about activity-based cost hierarchy. Different types of costs, unit level costs. They're incurred with each unit of output. So power, electricity for the machines and whatever, is used each time a unit's produced. Batch level costs, this is like setup costs. The more batches we produce, the more the setup costs are. Product sustaining costs. I said I wasn't going to read the notes to you, and I must stop doing this, but it says there, it doesn't increase in relation to the batches of the units, but they're needed to support the product, things like the design costs. And finally, facility level costs, which you can't really trace to production, such as admin costs, which don't relate directly to the units produced, the batches produced, or whatever. It's got below strengths, weaknesses of activity-based costing. In some ways pretty obvious, but I don't know, people tend to make it too obvious. I think there is no question that in principle, activity-based costing gives more accurate costings. However, that on its own doesn't really mean a lot. You know, why do we care? Because at the end of the day, from the example we just did, total overheads are 190,000, and for the company as a whole, it's 190,000 whatever happens, you know, however we choose to split it between the products. The reason, though, it matters about getting more accurate costings is two things which very much go together. One reason for having the costings is to help us decide on a selling price, and so it leads to better pricing decisions. Very obviously, the more accurate the cost is, the more you can set a selling price to be confident of making a profit. And also other decisions as well. It leads to better decision making based on profitability. What I'm getting at is that maybe we can't change the selling price. Maybe it's, in a sense, forced on us by our competitors. And so if we can't increase the selling price and we're making decisions such as, is it worth producing C? Well, of course, on activity-based, no it isn't. We're better off producing more A's and B's. But you can only make that sort of decision confidently if you're confident that you've got an accurate costing. So that's one strength. The other, possibly more importantly, is that if we're using ABC, it forces us, and in fact let me write this first and then I'll make sure you're clear about it afterwards, but it forces us to determine what causes the overheads and that leads to greater efficiency and cost savings. Let me explain what I mean there. You see, with traditional costing, we just took the 190,000 and we charged it. It was a sort of arithmetical exercise. And we paid no attention to why we were spending 190,000 in the first place. With activity-based, we're forced to determine where we're spending it. You know, 90,000 is on setups, 30,000 is on receiving, and so on. And then we're forced to ask, why are we spending that money? You know, setup costs, I said, that's perhaps the cost of, I don't know, maybe we've got 5 men whose job it is to set up the machines every time we produce a new batch. So, you know, you've got their salaries and associated costs. So, okay, that's costing us 90,000. Why are we incurring it? Because of the number of times we're setting up. And why are we setting up all those times, 10, 13, 2? I mean, product A, we're setting up 10 times and we're producing in total 20,000 units. So on average, each batch must be of 2,000 units. Product C, all right, we're only setting up 2 times, but we're only producing 2,000 in total. So on average, there's only 1,000 in each batch for product C. So why are we making C in smaller batches? Maybe the type of product with no choice. Fine, in which case it's costing more and we should be charging more. But if we could make it in bigger batches, we wouldn't need as many setups. And if we didn't need as many setups, maybe we don't need as many men, and we can cut the cost of 90,000. So the fact we're forced to find out why we're incurring the costs can make us examine, you know, could we make bigger batches, fewer setups, save money? That is the real beauty of activity-based, that hopefully it can lead to greater efficiency. And as I said, as a result, cost savings. So there are the advantages, its strengths. The downside, the weakness, although I'm not sure weakness is quite the right word, but the downside of activity-based is it's fine in a sort of exam-style question, you know, when you're told what causes the overheads, what the cost drivers are. But in practice, there are going to be overheads for which there is no obvious cost driver. You know, what about rent of the factory? What's the cost driver? Is it size of the units? Whatever. And so that's the problem. It's not always possible to identify a cost driver. You know, for each overhead. And on top of that, perhaps I should have said first, that in practice, it's going to be time consuming and therefore expensive to go through and identify where we're incurring overheads and identify a cost driver, even when there is one. So the exercise overall can be time consuming and expensive. Expensive because it's time consuming. And so there's the problem. As far as the first one's concerned, what companies who use activity-based tend to do, they tend to use activity-based for those overheads where it is possible to identify a cost driver. So, you know, number of setup costs and so on. But then any remaining overheads, like perhaps rent of the factory, not much point in wasting time trying to identify a cost driver when there isn't one. So remaining overheads, they would absorb perhaps, or what they tend to is absorb using the traditional approach, just a cost per hour, whether it's labour hours or machine hours. There we are. The notes carry on talking about activity-based management, which again really should be revision, but read it properly. I'm not going to read it to you. I think it's all it should all make perfect sense. However, what I am going to carry on with, but we'll have a break. It'll be part 2 of the lecture. Is what you might call an extension activity-based, where we can use the same idea as we've used in activity-based costing to looking at individual customers, at customer profitability. But I say we'll have a break and then go straight on with section 6 of this chapter. Section 6 onwards, we'll look at customer profitability.